everyone, welcome back to my channel. So my today's topic is tax planning for salaried individual, and if your earning is through salary, then this video is for you. So keep on watching. But first I want to tell you that on your right hand side you can see a red color button on which subscribe is written. Please click on that button so that whenever I upload any video you will get the notification. So let's get started with the topic. Tax planning for salaried assessee can be divided into two categories, which is salary restructuring and investment in tax saving devices. So I am going to tell you about these two components in detail so that you will get to know the idea how you can save the tax through these categories. What is salary restructuring? An employee can structure or restructure his salary so as to reduce the tax outgo on his total salary by availing of exempt allowances, benefits and reimbursement. I want to tell you in simple language that as per our Income Tax Act, we have many options available in the form of allowances, benefits and reimbursements through which you can save your tax. I'm going to give you an example. If any company is offering you CTC of rupees 10 lakh, then they will not going to give full 10 lakh in the form of basic salary. There may be many components as per the company norms. These components can vary as per company to company. So what are these components? I am going to tell you, like basic salary, house rent allowance, transport allowance, uniform allowance, children education allowance, medical reimbursement, conveyance reimbursements. So these are the allowances and reimbursement through which you can save your tax. Now I am going to tell you about these components in detail. So first component which I am going to tell you is house rent allowance. Benefit can be availed if you are residing in a rented house. In that case, by producing the rent receipts to employer, you can avail the tax benefit on payment of house rent. Yes, so if you are residing in a house which is rented and you are paying the rent, then you have to provide rent receipts to your owner, and on that you can save your tax. This component is very wide and formula for calculating the tax is very different. If you want to know in detail, do let me know in the comment section below, or you can mail me on my email ID. I'll make separate video for house rent allowance if you want to know in detail. Then move on to transport allowance are exempt up to rupees 1600 per month, granted to employees meet his expenditure for the purpose of commuting between office and residence. So on 1600 per month rupees you are going to save your tax. Uniform allowance, expense on purchase and maintenance of employees. Uniform can be paid or reimbursed by the employer. This however needs to be uniform and any civil dress. So if in your company there is a culture of uniform and your employer is providing you the uniform, then only you can get the benefit of this uniform allowance. Then moving on to very important allowance, which is children education allowance. If any allowance is received for education and hostel stay of employees' children from the employer, exemption can be claimed under section 1014(2), which is rupees 100 per month for education and 300 per month for the hostel. But so there is a limit on the maximum number of childs, which is 2 childs. You can avail this exemption for the 2 children. If you have 3 children, then also you can avail the exemption of the 2 children's. Education rupees 100 per month and hostel rupees 300 per month per child. So on that you are going to save your tax. Now medical reimbursement, this is very important. For this you have to produce medical bills to your employer and you will get the tax rebate on rupees 15,000. So yes, through medical reimbursement you are going to save tax on rupees 15,000 by producing the bills of medicines or doctor prescriptions. Now move on to conveyance reimbursement. Employee can claim conveyance reimbursement subject to production of petrol or fuel bill to the employer. The limit of conveyance reimbursement can be decided by the employer. So this can be vary person to person or company to company. So these are the categories of restructuring of salary through which you can save your tax. joined if you are going to join a company which is new to you, so the important thing which you have to look in your salary part is the restructuring of salary. What are the components in your salary and through which components you can save your tax are the most important things, and you can even bargain or you can even negotiate with your employer so that they can restructure your salary according to your choice. Now the second part to save the tax on salary is investment in tax saving devices. So this is the second method through which you can save your tax. There are many schemes that are listed by Income Tax Department, and these are to be found in section 80 of the income tax. The larger in section 80C, there is an overall ceiling for the total investment under section 80C, which is currently rupees 1,50,000. So on rupees 1,50,000 you can save tax. Similarly, for section 80D, the ceiling is 25,000 plus 30,000 for mediclaim of dependent parents. So you can get the benefit under section 80D maximum to 55,000. Now I am going to tell you the section 80C in detail. Bank deposit, term deposit in a scheduled bank with a minimum period of 5 years notified under Bank Term Deposit Scheme 2006 not only give a fixed and assured return but also a tax advantage. But remember that the entire interest income from such deposit is taxable. So if you are planning to make a FD or a term deposit in the bank, the minimum period of that FD or term deposit should be 5 years. Then only you will get the benefit under section 80C on this term deposit, but the interest of this term deposit will be taxable. Employee Provident Fund. This is a forced saving for employees and help them save for retirement. This is the deduction made by employer on the part of employee. Every month 12% of your basic salary or rupees 1800, whichever is less, is deducted and put into a kitty maintained either by government or company's trust. So this is a provident fund which will be deducted by your employer every month from your salary. On this provident fund you are going to save tax. Public provident fund, this is self-directed investment option. This is separate from EPF. This is PPF. This is public provident fund. It is essentially a 15 years investment that gives a tax-free return. But the benefit of public provident fund PPF is that the interest on this public provident fund is also exempt from tax. So this is the major benefit for PPF. Repayment of home loan. If you had taken any home loan from any bank, then you are going to get benefit under section 80C for the principal component only. Interest component of housing loan deduction you will get under section 24, which is separate from section 80C. So here under section 80C on repayment of home loan, the principal component can only be the non-taxable under section 80. Then children fees, parents can claim a deduction for tuition fees for a minimum of 2 children within the overall limit. So if you are paying to any school, the fee for your children, the limit of children is limited here for the 2 children, and let's say as per school there are 3 components: tuition fees, development fees, examination fees. Then you are going to save tax only on the tuition fees. Yes, tuition fee will be exempt under section 80C. Life insurance, your life cover premium is eligible for a deduction within specified limit under section 80C. Then pension plan, if an investment is made under this section, then the qualifying amount under section 80C stand reduced to that extent. Investment in insurance and mutual fund pension plan also comes under this section. So this is the section 80C. Then national savings certificate is also comes under section 80C. These are for those who are less averse to the risk. So if you don't want to take any risk, then NSC is for you. This government backed security is available at post offices. The interest rate is entirely taxable. NSC are good for those in lower tax slabs with an investment horizon of 6 years. Equity linked saving schemes. These are mutual fund product and carry market risk. yes, so you can invest under the equity linked savings schemes also, but are these, so if you can take the risk, then these are for you. Under the IT Act, investor investing in an ELSS claim benefit under section 80C. 80D, very important section. Deduction allowed under 80D is rupees 25,000 and 30,000 for senior citizens for Mediclaim. So if any person has taken Mediclaim for his spouse and children's and himself, then he will going to get the benefit up to rupees 25,000 under section 80D, and he have the parents who are dependent on him and he had taken their Mediclaim, then he will get the separate 30,000 benefit under section 80D. So total benefit can be claimed by a person up to rupees 55,000 in section 80D. If you want to know in detail, then do let me know in the comment section below. I'll make a separate, and if you have any queries, then don't forget to mail me. I'm ready for your queries and suggestions. Move on to section 80E. This is for the education loan. The interest on loan taken for higher education is also eligible for deduction from your total income under section 80E. There is no monetary ceiling on the interest you can claim as a deduction. The loan must have been taken from a financial institution or an approved educational institution. So interest on higher education loan is entirely tax free under section 80E. Section 80G, charity or donation. To avail tax benefit under section 80G, donation must be made only to specified trust. The tax break vary according to trust, which you have to donate it. This is a very wide section. If you want to know in detail, then I can make a separate video for this section, but here I am going to give you the brief to save your tax on the salary. So if you want to know in detail, do let me know. Section 80DD, an expenditure for medical treatment including nursing of a dependent handicapped person. So this section is basically for a dependent handicapped person who is dependent on you and who is handicapped. Training and rehabilitation of persons suffering from a permanent physical disability or from mental retardation. It is essential to note that person must not suffer less than 40% or any of the above disabilities. His income tax deduction which is allowed under section 80DD is rupees 75,000 if his disability is up to 40%. These criteria you can see in this section widely. This criteria is very wide, so if you want to know in detail, I can tell you in separate video. The income tax deduction which is allowed under section 80DD is 1,25,000 if disability is over 80% and above. Then you will get the deduction of 1,25,000. So this is the video about tax planning on salary. If you have any questions, then do let me know. Don't forget to subscribe to my channel. Thank you for watching. Bye.